Hello everyone, and welcome to this presentation of the right way to trade tops and bottoms. Welcome once again. My name is Primo, and I am the president and founder of Specialist Trading. And for those of you who are new to our webinars and are new to Specialist Trading, we are an educational website, and we provide you, as you see here, with the insights, wisdom, and trading strategies from the floor. We basically teach all of our members and all of our students how to trade using everything that I've accumulated in my 36 years. To give you a little bit more background about myself, as I just stated, I've been trading for 36 years now. I started my career on the floor of the Pacific Stock Exchange, where I was on the floor for a total of 16 years. In 9 of those years, I was a specialist for Donaldson, Lufkin, and Jenrette. So that's where we get the title Specialist Trading. If you're not familiar with what a specialist is, I know they've kind of really phased them out of the market system lately, but specialists, if you look at pictures of the trading floor and you see all the paper on the floor and those guys with the hand signals yelling back and forth, the people behind the large booths were specialists, meaning that they specialized in anywhere from 35 to 60 stocks. So if you wanted to purchase, buy, or sell any one of those particular issues, you had to go to the trader who specialized in those. Hence, that's where you get the name Specialist Trading. As I stated, I've been trading for 36 years. I traded on the floor through the crash of 1987 and then the great bull market that ensued after that. I left the floor in the mid-90s to pursue my own trading, to manage money. And in the last 5 or 6 years, I've gotten really heavily into teaching, where now with Specialist Trading, all I do is teach all of my own methods and techniques that I personally use today for my own trading account and my own managing of money. And as well, this is what I teach all of my members, all the things that I've accumulated in my 36 years. So as I stated, we're going to talk about the right way to trade tops and bottoms. When I first started out trading, that's all I traded, tops and bottoms. And I'm going to show you a very overlooked hidden technique that I learned on the floor that will really hopefully take your trading to the next level when you're trading tops and bottoms. But before we begin, we're required to show you this, so please take a moment to view our disclaimer. I'm going to show you some performance results with this technique that I'm about to explain and reveal to you, but please remember that we can in no way guarantee that any of the results I'm about to show you will be repeated in the future. So as you're taking a moment to view our disclaimer, I'd also like to mention that if you're new to my presentations, you know that I love to answer any questions you may have, but I like to wait till the very end of the presentation. I know a lot of different presenters on webinars like to take questions while the webinar is proceeding, but as I stated, we're an educational company, and I like to really use this as if it's a form of a classroom. So we'll stop at the very last 15 or so minutes to take any questions, okay? Now, if you have a question, please just write it down and try to remember it, and I promise I'll get to it at the very end of today's class. If you happen to come up with a question once we've concluded, do not worry. I'm going to leave you also with a phone number as well as an email address, so you can always contact us and ask us any questions about what I'm going over today as well. Okay, so there's lots of ways to reach us. For those of you who just may have joined us, please remember to wait till the very end to ask any questions. Now, as we stated, we're an educational company. We try to really get you to really lessen your learning curve. I know so many traders take so many years, if not decades, where they finally get to a point where they either throw in the towel or they decide that, you know, I think I can have a go at this. But it really takes a long time for many traders and many people getting used to the markets. Hopefully, I can teach you how to trade with the same edge that turned my trading around. It can really shorten and lessen your learning curve so that you can really understand everything that I've accumulated in 36 years, possibly within 3 to 6 months. So my goal, once again, is to teach you, not to trade for you. Even though we provide you with signals and with strategies at Specialist Trading, once you're a member, you're privy to all of this. We really want to teach you so that you can really spot all these things on your own. All right, so let's talk about the right way to trade tops and bottoms. As I stated in the beginning of this presentation, that's really the way I used to trade. I just tried to pick tops when I deemed that the market was too overbought, and I tried to pick bottoms when it was too oversold. But as you all may know, that is really, over time, a recipe for disaster. In fact, believe me, I would know because I was trying to pick a bottom during the crash of 1987. And it worked for a little bit until the end of the day when the market was down over 500 points, and I gave it all back, plus roughly about $750,000 more. So it didn't really work out that well. The point is, there really is not a right way to try and pick a top and a bottom other than simply going with them. All right? That's what was taught to me by my mentors on the floor. to not try to pick a top over bottom, but to use them to go with them. So what exactly do we mean by that? What is this technique we're talking about? Well, let's look and see, first of all, how 99% of all traders trade looking at stocks when they're trying to trade tops and bottoms. All right, here's a current chart of CI. Okay, now as you can see, this started roughly in June, and we have a slow stochastic plotted on the very bottom, which is probably the indicator of choice when someone's trying to deem whether something is overbought or oversold. Now, conventional wisdom basically states when these lines cross over from going from overbought and cross below each other, then you simply go short or sell your position. And then when they come into the oversold area and then cross back up again, that is your signal to go long, and then vice versa. And this will work for a time being. In fact, as I said, I had some great success with this. As you can see here, had you gone short CI right here, you would have been short this time, and if you waited until the lines crossed again, you could have covered, possibly made maybe a point or so, but then you'd be long again, and you'd be making a nice 2 to 3 points here until you get another signal to go short. Okay, so this is like, I'm sure you'll be sitting back if you're trading this saying, boy, this is fantastic. I can do this all day and I'll be a millionaire by the end of the year. Well, as I stated, this is great and it works fantastically until it stops working. As you can see here, had you shorted, you would have had 1, 2, 3 trades that were working very well, but then you sold this last one and decided to go short on this crossover here. And then guess what? Well, it stops going down. In fact, it starts going higher. But the lines are crossing again, so conventional wisdom says, well, that's okay. It's probably just recalculating and time to get short again, so we should probably sell some more. Let's double down and average our position. So guess what? It goes even higher. So you decide to, well, we'll try it one more time. We'll sell so we can make it all back, and it goes higher and higher until ultimately you've lost everything that you made on these great first 3 trades here, and you've given it all back plus some. Okay? I'm sure this looks familiar to a lot of traders. This is the way 99.9% of traders trade when they're trying to pick tops and bottoms. The same principle applies if you're trading intraday trading of the E-mini S&P. Okay, for all you E-mini traders out there, here's a 1-minute chart of the E-mini going back a couple of weeks ago. If you're day trading that, you like to trade overbought, oversold scenarios, and this will work great for a time being. As we see here, had you taken these 2 signals, when you were in oversold territory and we crossed over, you could have simply gone long here, made roughly a quick point or so, and then when we crossed over again, which correlates to this point right here, you could have gone short, and guess what? You would have made another point or so back, and here we cross back over again. So you're saying to yourself, this is fantastic. I'm just going to make so much money every day just trading this technique. So you cover your short, make some money there again, and now you decide to go long. And you go long, and well, this time it doesn't work. Well, so you double up, you decide to buy some more on the next crossover, and it doesn't go down anymore, but it goes sideways until it starts to fall out of bed. And then ultimately, you've given back everything you made. In this short time period, the next 3 signals, you've given everything back. Okay? How about the Forex markets? Well, this is not just privy to stocks or the E-mini. Same thing can happen in the Forex markets. If we look here at the beginning of the year in the dollar-yen, well, as we can see, we're tremendously overbought, correlated with the conventional wisdom. But once the lines crossed over in the slow stochastic, that's your chance to go short because obviously it's topped out. We've never been this high before in the dollar-yen, so you want to go short, but it doesn't do anything. It kind of just goes sideways. So you double down again, it goes higher, and it continues to go higher until you've given everything back. You probably are wiped out of your account by this time because the dollar-yen is just so powerful. It's going up by so many pips a day. And as you can see, this is a recipe for disaster. This is what I learned on the floor of the exchange because, as I stated, I used to trade this way. But once I finally came upon some mentors who were able to really teach me how to trade and how to get on that road to consistency, this is what they said. They said, Steve, there is no such thing as overbought or oversold, okay? I'm going to repeat that again, or maybe you may even want to write that down and put it in front of your computer. But there is no such thing as overbought or oversold. Because I'm sure we've seen that stocks, the Forex markets, the E-mini futures can go as high as they want to or as low as they want to. So for a time being, they'll work fine in this moving back and forth within a range. But then when they get to move and they get into hyperspace, they just keep going and going and going. So there's no such thing as overbought or oversold. You never want to play that game. Trust me, I know firsthand because this is the way I used to trade, and I had a very difficult time trading my first year as a specialist. So if there's no such thing as overbought and oversold, then how would you trade tops and bottoms? What is the correct way? Remember, the right way to trade tops and bottoms is to go with them, not to try and pick a top, not to try and pick a bottom, but to spot those tops and bottoms and then simply jump on board and go with the flow rather than trying to fight it and swim upstream. Okay? That's how you get on the road to consistency. All right, so what's this technique that I learned, or what's this technique that I currently use and want to share with you? Let's look at our stock example. Okay, let's look at the same example, the same exact signals we had showed you before in CI. Now, this is where you would have used before, and this is where, as we stated, this is a recipe for disaster, because ultimately you're going to give everything back, and you'll probably end your trading career trading like this for an extended period of time. So how do we want to go with overbought and oversold conditions? Well, here's what we do. Get rid of all these crossover. We're not concerned where the fast crossover, the slower one, and then we use these as overbought, oversold areas. We're not concerned with that. So we totally get rid of that. We still keep the indicator, whatever indicator we're using, the RSI or the stochastics or any other overbought, oversold tool you may be using. But we're not concerned with looking for tops and bottoms. And then we want to add one more indicator. That is the 50-period simple moving average. We call that the buy-sell line at Specialist Trading. And the way we use it is, once we plot it, we ask ourselves, where is price in relation to that 50-period simple moving average? All right? As you can see, price is above here. For all intents and purposes, the majority of price is above. So this means we're only looking to go long. If price is above, we'll only look for buy setups. We're not even going to consider going short. Okay? So right off the bat, we won't get caught being short and the market keeps going higher and higher. We're going with the flow. All right, so now we know that we're only looking to buy CI. We're not going to look at any type of topping formations. All right, so what do we do now? Well, we still look at our overbought, oversold oscillator here, the stochastics, and we want to look at all these areas where the conventional wisdom tells us we are overbought. Okay, every time we crossed above the 80 threshold according to the slow stochastic. See right here, circled in green? At each one of these points, so-called conventional wisdom is telling us we are overbought. All right. Well, before we would use that to go short. Now we're going to use these levels to go long. But how are we going to do that? Well, at every point that we went into overbought, so-called overbought territory, we're going to look for a little top to be made, as you see right here where all these green horizontal lines are. Okay? So we're only looking for the tops that were made, the short-term tops that were made while we were in the so-called overbought territory, as you see right here, okay? And each time one of these is exceeded by one tick, that's our signal to enter. So as you can see, we had a short-term top right here, and we just simply wait to see if it's exceeded later on, and yes it was, so that would have been an entry point. We had another one that was created right here. This would have been an entry point. And look at all the entry points you could have had here. Do you see how we use the so-called tops as entry points, not as ways to get short and go against the current of the market, but we want to go with it. It's so much easier when you're trading in sync with the market as opposed to trading against it. And once again, I know this firsthand because I would trade the previous way and it would work until it didn't work, and then I'd give everything back. Let's look at the example we had earlier in the E-mini. All right. Now, this instance, once again, recipe for disaster. It'll work until it stops working. So we're not concerned with picking tops and bottoms, so we get rid of these corresponding bars here. But what do? We add the 50-period simple moving average. And once again, for the majority of this chart snapshot here, price is below. So what does this mean? If price is below, we are only considering going short. We are not even going to consider going long. Okay? So we're only going to consider going short. Now we know that price beeped its head above here for just a short period of time, but that's okay. The majority of the bars are below. All right, so once we know that we're only looking to get short, we're not going to try and pick any bottoms and ultimately get killed, then we look for those areas that are the so-called conventional wisdom oversold areas, okay, right here, where the oscillator, in this case, goes below 20. All right? So we locate all the times we're below 20, And since we're below the 50-period simple moving average, we're looking to see where a short-term low was created, okay, during the times when we were in the so-called oversold territory. And that would have been right here, right here, right here. So each time one of these areas is traded below, is exceeded to the downside, that's your entry point, as you see here. And this assures that you are always in sync with the market. You're not going against it, okay? And we're just explaining what the entry points are right now. But as you can see, do you see how this is much more conducive to winning or consistent trading as opposed to trying to pick tops and bottoms? Do you see how much more easier this is, that you really feel that you're in sync with the market as to trying to fight it? And then lastly, the Forex example we talked about, all right? That was in the dollar-yen. Here's where we originally wanted to short all the entire time when we were in the so-called overbought territory, and all the time the lines crossed over. Well, we would have got literally killed and given back all of our money that we maybe would have previously made, so we don't even concern ourselves with this anymore. We apply a 50-period simple moving average, and see how easy this is? Once we apply the 50-period simple moving average, it automatically tells us what side of the market we should be on. We shouldn't even be considering going short anything. We should only be looking to go long. So the 50-period simple moving average is a great technique to get you on the right side. So right now, we know we're only going to look to go long, the dollar-yen. Next, we go down to our overbought, oversold indicator, whatever it is. Once again, it could be an RSI, could be another oscillator, could be something that you put together. It doesn't matter. But whenever it goes into the so-called overbought area, as we see here, we want to look for these short-term tops that were made, okay? Short-term tops being these kind of pivots where we have a high followed by a higher high followed by a lower high. Here's another short-term top, another one. And remember, we're only looking for the tops that were created in the so-called overbought territory. I know you'll see a lot of other tops and bottoms when you start to use this technique, but we're only concerned with the ones that were made in overbought or oversold territory. So all these are short-term tops that were made when you were in the so-called overbought territory. Now we want to just wait till we exceed those. As long as we're still above the 50-period simple moving average, we can use them all as entry points. See how simple this is? So whereas someone would have tried to use this example and tried to use the same technique, the same oscillator, and tried to use it to go short, we're using it the opposite way, to go with the market and to go long. So much easier. You're going to sleep a lot better at night, plus your account's going to look a lot better as well. All right, so let's look at some current examples. We use those as we're older for educational purposes. Let's show you some things that happened within the last month, within the last week as well. Here's BBY. As you can see, it's easy to say we're only looking to go long because we're well above the 50-period simple moving average, going from May all the way till the first week of July here. All right. Every time we crossed above so-called overbought territory, we look for some type of top that was created, and that would be our entry point. So no one would have even considered trying to pick a top in BBY. All you want to do is look for an area to go long, and you would have had some nice little gains along the way. How about the E-mini? We're looking at a tick bar chart. We're going to get a lot of signals if you go down to smaller time frames, especially tick bars. And we obviously are only going to be looking to go short. Why? Because price is below the 50-period simple moving average. There is no way during this large sell-off that happened, this was last week, there is no way we would even consider trying to pick a bottom here. All right? I know a lot of traders with the sell-off in the last couple of days have gotten hurt thinking, boy, I'm waiting for the market to bounce, but in the meantime, I got stopped out because it didn't bounce. Well, then it finally does bounce, and it's too late. So it's much easier to go in sync with the market, and then when the market decides to go back up the way it did today, well, then you can be in sync with it going up. Now, in this instance, we had some large sections here where we were in the so-called oversold territory. So rather than try to use them as bottoms where we would have gotten really hurt, we use these as short-term areas to enter. And you could have easily entered all these areas to go short. Here's a 10-minute chart looking back, and I believe this was on the 9th, coming into the 9th, which was Tuesday. This was on the 8th, coming into the 9th. We're above the 50-period simple moving average on a 10-minute chart. So since we're above, we're going to be looking at the so-called overbought areas, and then we're looking for short-term tops to be made. So right here, you could have used all these as entry points to get into the market. And then lastly, we look at the Forex markets. Now the Australian dollar has been literally getting killed for a good part of the year. Why? Well, first of all, it's easy to tell because we're below the 50-period simple moving average starting as early back as March or April. So this means we're only looking to go short. So if we're looking to go short, we immediately look for the oversold areas, not to buy, not to pick a bottom. Had you tried that, I guarantee you your account would have been depleted. But we look for them for entry points. So we look for these little short-term bottoms only being made while we're in the so-called oversold area. And once they're exceeded by 1 pip or so to the downside, then that's our entry point. And you would have had some really nice trades using this technique on the Australian dollar this past year. Now, remember, if there's one thing I can leave you with, this is the same thing that my mentors taught me, the same thing that was able to turn my way of trading around and that totally had me stop trading tops and bottoms. And that was, they said, Steve, there is no such thing as overbought or oversold. You know, it's really an illusion. From time to time, you will see it where it fits perfectly, and you'll think, boy, this is fantastic, this works great. But then the times it doesn't work, you give everything back. It's almost like the slot machines. You know, if you stay and play for a while, it'll give you illusion that you're doing all right because every once in a while you'll get a winner and you'll see that the bell ring and that you maybe have some cash flow. So you think, well, I guess I'm doing okay. But over time, you really aren't doing well. The odds are against you having any gains. And so really with slot machines, they're the worst statistical gambling reference in any casino. It's the same way with picking tops and bottoms. They are a recipe for disaster. Just write this down. Remember this. There is no such thing as overbought or oversold. So never try to trade anything with the reference that it's overbought. And never try to trade anything with the reference of it being oversold because there is no such thing. It's an illusion. All right, so what is the lesson learned? Never ever try to pick tops and bottoms. That's it. If you're trying to use tops and bottoms, just go with them. But these are important points to remember, okay? As you saw right now, all we did was show you the entry points, okay? These are not full-fledged strategies. In order to have a full-fledged strategy, you not only need an entry point, you also need to have some recognition of where to place your stop, all right? You also need to know where to exit. And you also have to have money management in place. How many shares you're going to trade? How many contracts should you be trading, okay? So there's a lot of things that go into play. We only shared with you one piece of the puzzle in terms of trading on that road to consistency. That was how to be in sync with the market and looking for these fine-tuned entry points. But once again, in order to have a full-fledged strategy, you need to know where to place your stop. You need to know where to move your stop unchanged if you get to a certain point. You also need to know where to exit and how many shares or contracts to trade. Those are all the things needed for a full-fledged strategy. We didn't share all of those with you. Now, if I can just take a few moments here to share with you what we do at Specialist Trading. We provide you with all of that information. Remember, we're an educational company. We provide you with all the sources, all the tips and techniques that I've learned in 36 years, not only in techniques and things like this today, but also with full-fledged strategies. Now, as you can see, we have 3 separate courses for trading the different markets. We have courses for stock trading, courses for E-mini trading, and a full course for Forex trading. Each one of these courses comes with upwards of 10 specific strategies built for that particular market. Anything from position trading to swing trading to intraday day trading. The only thing is, if you buy our full suite, it's great. You're going to get all these strategies, but it can be rather expensive. Our courses run anywhere from $2,000 to $5,000. So what we've done for all of our members, we've tried to set them up so that you can purchase them in packages, such as combos, what we have here today, or individually. Now today, I want to share with you probably our most popular strategy that comes with our entry points, comes with our stops, comes with our exit points, and also comes with conservative and aggressive rules for trading as well. This is strategy number 4, and this is strategy number 4 for all the markets, for stocks, for E-mini, and for the Forex markets. It's a 3-course combo. This usually runs close to $2,100. For all the attendees today, we're discounting this down to $895. I want to share with you some recent signals that we've had with strategy number 4. If you're a stock trader looking at the beginning of the year, these were actual signals that were generated using strategy number 4 for the stock market. And if you're a member of Specialist Trading, you would have been privy to seeing all of these signals actually the night before. You would have seen them from our signal service. If we want to look at some recent signals, just as far as a month ago, or even just actually a few days ago, on the 17th, we issued a buy signal to go along TXT, Textron, which worked out very nicely. Now, strategy number 4 can also be programmed and work for the E-mini markets. Here's a 5-minute chart of the E-mini. This was going back to the 19th, which was just last Friday. As you can see here, the market was going up, and guess what? Strategy number 4 generated all of these buy signals on a 5-minute chart. Now we're looking at the 23rd, which was Tuesday. This was just 2 days ago, Tuesday of this week, and this was when the market was going lower. On a 10-minute chart, you would have received all of these signals to go short had you learned the strategy and using our add-ons for specific charting softwares. They would have been automatically signaling on your chart as they were being generated. And then lastly, the Forex markets. We have the strategy number 4 for the Forex markets. Here's an actual signal in the Canadian dollar to get along the beginning of February, which is a really nice signal. But then once again, we talked about the Australian dollar. These were all signals that were generated using strategy number 4, and all of our members were privy the night before of where to enter, where to place your stop, and where to exit on these particular trades. So as you can see, strategy number 4 is a great strategy. It transfers over. We have these for each and every of the different markets with just a few little differences, nuances for those particular markets. It's a great course. It probably is our most popular out of all of the strategies that we teach and use. It's a great pattern recognition strategy, okay? So that's about the only clue I can give you. But once you become a member of Specialist Trading, we tell you all the entries and exit points as well as the stop points. We teach you how to trade these conservatively and aggressively. It also comes with 1 year of trade signal alerts. So we'll issue the actual signals the night before, and you'll either get those through email or you can go to our password protective website and you can find out what they are. This also comes with 1 year of weekly trading lessons, webinars such as you're receiving today. And then finally, my personal email address. You can have access to me whenever you like, and if something doesn't make sense or you don't understand why a signal was or was not generated, you can always email me. As I stated, this usually will run close to $3,000 for all 3 of these. We discounted it down to $2,085, but for all the people attending today, we've even dropped it further down to $895, okay, for all 3 of these specific courses. But remember, this is for a limited time only, just as a favor to all the people that attend our webinars. So for more information, you can visit our sister site, which sells our combos and our individual strategies. That's ProTraderStrategies.com. If you're interested in the full suite, which comes with upwards of 10 different strategies for each particular market, that is SpecialistTrading.com. But if you're interested in the more inexpensive or less expensive strategies and combos, you can go to ProTraderStrategies.com. If you'd like to speak to our trading representative, you can contact Don Jans at ProTraderStrategies.com or call us directly at area code 310-492-5393. Okay, and I want to thank you all. If you happen to have questions, I want to thank you all for waiting to ask anything. I'll open up our question and answer box, so if it's okay right now, feel free to ask anything you'd like. I see someone is asking, why the 50-period simple moving average? Why not the 20 or the 100? That's a great question, and I probably get this asked by all of our new members. Once again, over my 36 years, the 50-period simple moving average seems to work the best in all markets and in all time frames. I know a lot of different educators and mentors like to use the 20 or even the 200. We have found that those smaller time frames for the moving averages work the best in small intraday trading, as the longer, such as 100 or 200 period moving averages, work better for weekly bars and even monthly bars. But the 50 seems to encompass each and every time frame. In fact, I was intraday trading today in the E-minis using a 50-period simple moving average, simple moving average on a tick chart, where it worked just fine. So that's what we really use, because it really encompasses all the different time frames, okay? And I would ask you to experiment with it. Just experiment with it. Apply a 50-period simple moving average on any time frame. Say you're an intraday trader, or let's say you're a weekly trader. It doesn't matter. And look at the signals that were, that were in your portfolio, the last 10 or 20 signals, and I can almost guarantee that the losers you had were because you were out of sync with the rule I stated in the beginning. If price is below, you should only be looking to go short. You should only be taking shorting signals. If price is above, you should have only been taking signals to go long. But most of the time, we lose money because we're out of sync with that simple rule. So apply the 50-period simple moving average and experiment with it, and I think you'll see why we use it so often. Okay? I hope that answers your questions. Ron asks, what value do you recommend for STO? I'm not sure what that means, and any difference between money week and daily charts, such as 12, 3, and 5. I guess what you're saying, what value do you recommend for stochastic, and any difference between the day of the week and daily charts, such as 12, 3, 5? Well, Ron, to be honest with you, I don't really use the stochastic anymore. I just use in terms of, I use the stochastic, but I don't really use it in terms of overbought or oversold. So I just use the standard slow default periods. So I don't even open up the edit box to see what they are. But I think just your standard default settings would be fine if you're using this technique. Okay. Charles asks, do you use options for hedging risk management? It's a good question, Charles. No, we don't. I don't have anything against it, but we provide you with upwards of 7 different stop placement areas. We know we have a lot of aggressive traders who like to trade very aggressively and they want to take on more risk, so we provide them with more aggressive stop placement. We also have very conservative traders who don't want to take on a lot of risk, so we provide them with that. And these are all things, once again, that I've learned through the years. And we also have ways in which to apply a particular mathematical formula which tells you when to move your stop to unchanged, as well as using a very common indicator that will tell you when to move your stop up to trail. So this can be applied to Forex, to E-mini, to stocks. So we really don't hedge that much. We have nothing against options, but this is not really an option course per se. Okay, we don't really use them that well. I know we have some members that love them, but we don't really use them that well. Okay, next question. Does the simple moving average or the exponential moving average make a large difference? No, it doesn't. It really doesn't. What we really want you to use is basically that philosophy where if price is above or below, that tells you what side to be on. Okay, it's more about using that than the actual number of the moving average and the actual placement and if it's an exponential or simple. We're more concerned that whatever moving average you decide to use, if price is below, you're only looking to go short. If price is above, you're only looking to go long. Okay? Let's see. Diana is asking, I see difference in today's training and the signals you show for strategy number 4. Sells were lower on a bar, whereas in signal they were shown higher. Please explain. Well, Diana, strategy number 4 is totally different than what I explained today. Okay? Strategy number 4 does not incorporate the same overbought, oversold technique that I shared with you. Strategy number 4 is more of a pullback consolidation strategy, okay? And so it's not the same thing when we're talking about what we share with you today. There were 2 entirely different techniques. What we shared with you today was simply an entry technique for trading with the flow of the market. You can build your own strategy if you like on top of that, or you can apply one of ours that uses that. Strategy number 4 doesn't incorporate that. Strategy number 4 is more of a pullback or a consolidation technique, which uses entirely different rules. Okay, so they're totally different things. Okay, I hope that makes sense. Let's see. It seems we are entering late if we enter in overbought and oversold areas. Would you agree? There's no such thing as entering late. That's one of the things you have to get over. If you have a trade that is in sync with the market, it doesn't matter where you enter. You have to get over this conventional wisdom we've been taught that, oh, we want to get into the top and out at the bottom. It doesn't matter. If you get in and ultimately it goes in your direction later on, that's fine. Okay? So it's not about entering late or too early. It's just about fine-tuning your entry so that you're in sync with the market. All right? Now, if you want to explore that and say, well, we have a number of traders who have used this technique and say, well, Steve, what I do is I wait for the entry, but I don't enter there. I'll wait for a little pullback after that has signaled, and I'll wait for, say I'm going short, I'll wait for price to pull back a little bit, and then that'll be my entry. That's fine. But, become a part of the process, but don't get too hung up on entering early, entering late, because it's more of a gambling technique. Like, I missed it. I got to get back in. As traders, we look at it more professionally. We're only trying to be in sync with the market, okay? Charles asks, as a specialist, did you need to use options a lot? Hi, Charles. Well, when I first started I used options, and they worked fantastic. I made tons of money, and then everybody figured out how to use them, and then I basically once again lost it all. And plus I was using the same techniques that I explained to you. I was trying to pick overbought and oversold areas. But then all the market makers got into it. It became a tremendous industry. When I first started trading options, there weren't a lot of people that knew anything about options. It was just basically buying long calls and buying long puts. And so it was very simple. There weren't a lot of traders involved. But then as it got more sophisticated, people started using them for hedging. The floor traders started really putting a lot of time decay on it, and so it was very difficult to trade. So that's when I stopped trading options. Okay, I realized they can be used for hedging and for protecting yourself. I just don't apply them. I try to keep things as simple as possible. Okay, Charles? For hedging your basket of stocks for a novice who wants to learn pro trading from scratch, which website should I visit, and how do I go about training with you? Well, I would say the best thing, if you're interested in becoming a member of Specialist Trading, basically visit our site. We can show you ways in which to protect a basket of stocks. That's what we do. We provide you with the education that I learned from the floor, is to contact Don Jans, our VP of trading and sales. He can give you all the information you need and provide you with more discounts and show you exactly what you need to get on the road to that consistency. Okay. What else is there? It's confusing with many strategies and courses. One question says, yes, it is. That's why we have broken it down to you can buy these individual strategy number 4 courses. Okay. We feel strategy number 4 is a great starter course. It not only is one of our most consistent trading strategies, but you'll get a lot of signals. It trades in any time frame, in any direction, and as you see here, we have it for all the different markets. So it's a great way to begin, and plus at that reduced price, it's unbelievable. With the examples I showed you just from this last couple of weeks, you could have paid for the course maybe 2 or 3 times over just by taking the trades that I showed you. Okay, so I'm not going to tell you. I know some teachers will say, you know, we have 200% gains this week and all. You know, we're not a systematic company. We don't keep records. The only records we keep are of the signals we generate. Okay, we're not a systematic company where we go back and use hypothetical examples, you know, going back 10 years and say these are the results you would have had. Because I've been trading long enough to know that they can change, and I have seen systems and even traded systems that work tremendously going back 10 years, and the minute I start trading, they don't work. And then it's been the opposite. I've seen systems with terrible back-tested results, and then they work, and they work great for years to come, but nobody trades them because the results going back 10 years are terrible. So that is why we are required to tell you that past performance is not indicative of future results, because it isn't. So we don't rely on using any type of statistics, we just use things that work while we're using them, okay? And plus we teach you ways with our advanced money management courses to stay out of the way when certain strategies are in drawdowns or in sell-off. So we really try to make things simple as possible. We have people that are trading our strategies in over 45 countries across the world, anywhere from hedge fund managers to people that have been trading for 2 weeks their entire life. They've never even traded before. And they're all trading the same strategy. It's not like we change them to meet the needs of a particular experienced trader. They're trading the same rules. The same rules that I trade. Someone who's been trading for this long trades the same way for someone who's been trading 1 week. So we really pride ourselves on our simplicity, and that's what our goal is, as we stated, to teach you how to trade. We want to give you this education to shorten your learning curve, okay? So I hope this makes sense. Once again, if you're interested in getting more information, I would contact the VP of trading research right now and of sales. That's Don Jans at ProTraderStrategies.com. And you can call us directly at 310-492-5393. As I stated, this special, which I'll backtrack right here, for strategy number 4 is only going on for a couple of days. So if you're interested and really interested in taking your trading to the next level and getting the education that I provide for you, personal education, almost close to a mentorship, this is really, we feel, a very inexpensive price and the best way to go, okay? So this is for strategy number 4. If you have more questions, simply call that number or contact Don Jans at ProTraderStrategies. and he can give you a lot more information and fill you in with anything you may be interested in, okay? Let's see, Driv asks, I'm looking for an entire course, not singular strategies. Can you help me with that? Yeah, Don can help you with that. Just speak to Don. He can help you with all of that, yeah. And I will be there with, once you sign up and become a member, that's what I do. I basically hold your hand and walk you through all that. So just contact him. He can help you with all of that, and either way. But remember, this is an educational course. We're not going to sit here and tell you that, well, you know, we just furnish you nightly signals. We want you to be able to spot the signals on your own. It won't make sense if you don't learn the process, but just take the signals. Because I can almost guarantee you, if you don't learn what the strategy is based off of, you won't make money because you really won't understand why you're placing your stop here, why you're exiting here, and you'll try to tinker with the strategy, and you'll ultimately probably lose. So I want to educate the people so that they fully understand it, so that after a couple of weeks, maybe a couple of months, you don't even need any of my education anymore because you fully understand it and you can go out and trade on your own, okay? Even though I'll be there with you for an extended period of time answering any questions, we have members that you know, don't even email me anymore because they figured out how to do it and they're on their own now, and that's our goal, okay? All right, well, I guess this brings us to the end of this presentation. I want to thank you so much for attending today. Remember, please, if you're interested in taking your trading to the next level, contact Don Jans and he will fill you in with all the information about the special we have for a limited time only, okay? Thank you so much. I hope the information I shared with you today will help you. Remember to paper trade it for a while just so you can understand the process. If you have any questions, contact us, and we'll see you next time. Best of luck trading. Bye-bye.